Hi there, welcome to Kneppy Invest. Continuing on looking companies that release interesting March quarter results. In fact, I have a list here of 34 companies I like to do a video on. No doubt I won't get through all those companies. So, if you do want me to feature a company that release an interesting Appendix 4C or 5B, just leave that company, your thoughts, in the comment section of this video. But in today's video, I'm going to be featuring a really intriguing company called Doug. It hasn't been on the ASX too long, but just after this company listed on the ASX, I started following their fortunes. And really, the first year or so, this company was a publicly traded company. It disappointed. But things are turning around for Doug in a meaningful way, and that should become quite apparent as we go through this video. Doug is a technology company. They have three business lines: software, high performance computing, or HPCAAS, sort of like SaaS, but a little bit longer, and services. They also have a platform called Doug McCloud, and Doug McCloud allows their customers to mix and match their high performance compute as a service, professional services, and software to suit the customer's need. Now, later in the video, I'll go through the revenue generated in their three business line, and there is definitely one that is outperforming the others, but I'll talk about that division later in the video. Doug was founded in 2003 and listed on the ASX 12th of August 2020. For some reason, I was thinking it listed in 2021, but 2020 is not unusual because after COVID-19 financial panic, and when the stock markets throughout the world were going through a massive boom, a lot of companies wanted to list during that period because companies list when there is a pretty powerful bull market. Right now, I won't say we're in a bear market, but there's no companies listing. No companies want any part of the equity exchanges right now. The reason behind that is because one of the reasons they list on the equity markets is for capital. And it's much harder to get capital, much harder to do equity raisings. And so we are seeing right now on May the 8th, a dearth of companies, particularly non-mining companies, listing on the ASX. And this is probably true all around the world. The managing director and co-founder, Matthew Lamont, he has 20.4% holding in this company. So definitely skin in the game when it comes to Doug. And two of the largest shareholders are Perennial Value with 13.7% holding and Regal with 8%. Now, last time I did a video on Doug was in June 2022, might have been July 2022. And at that point in time, the share price of this company was 48 cents, which means the market cap of Doug was 56 million. And even though I am a shareholder right now, I wasn't a shareholder back then. And if you take a look at the financial performance of this company over the past year, that is just screaming out value. A market cap of 56 million. However, the company has been performing, and that's why the share price and the valuation of this company has more than doubled since June 2022. So in just under 1 year, the share price has more than doubled. And the ticker code for this company, now I've said this a lot in other videos, could it be anything else? And for this company, that's absolutely true. Could the ticker code be anything else than DUG? And in fact, the answer to that is yes, it could be something else. If there was another company with a ticker code DUG, Doug would have had to find another ticker code. I'm not even sure who finds the relevant ticker codes for these companies. I'm not sure if it's company itself, but Doug or DUG is an obvious ticker code for this company. Now, before we have a look at the March quarter results, I'm going to go through the March quarter financial year 22 results, and then I'll have a look at the half year results before we have a look at the March financial year 23 results. And just so we can see how this company has performed over the past year and the past half year as well. Now, in the March quarter, financial year 22, this is when the share price was in a well-defined downtrend, when there was a lot of skepticism about this company. They actually were burning through cash before this particular quarter. And this was the first signs that the company and the management were turning things around. Receipts to customers, 9.8 million in this particular quarter. Probably the other thing I should mention, they report in US dollars. So receipts to customers, $9.8 million, and they were operating cash flow positive by $2.3 million in this particular quarter. Now, for the first 9 months of financial year 23, they're actually operating cash flow negative by almost $1 million. So in this particular quarter was the first sign they were turning things around in terms of their cash burn. Now, they did have a fair bit of cash at the end of this particular quarter, $11.8 million of cash. That's really helpful. It gives the management of the company a little bit more flexibility to do whatever they want with that cash, pay down debt, maybe make some acquisitions, research and development. Definitely not share buyback, although that could have been in their minds at this point in time, and definitely not any sort of dividends. Now, one of the reasons why they really improved their cash burn from being cash flow negative to cash flow positive was, even though cash receipts were up in this particular quarter, they really cut down on their spending. In fact, all their spending was down. Product manufacturing operating costs down 300,000, staff costs down 2.3 million, administration costs down 150,000, and with the cash flow into their operations, they were able to repay $500,000 of debt. Now it's the March quarter results for financial year 23, and the market got a little bit excited about these results because these were really good results. So cash receipts, $15.5 million, and Doug was operating cash flow positive by $4.9 million in one quarter. The other thing to take note is when you look at investing and financing activities, this company is not burning through much cash in those. So the majority of that $4.9 million will fall to the bottom line, and that means the cash on hand actually increased by $3 million. The reason it only increased by $3 million is because they also repaid another $1.2 million of debt. Now, in this particular quarter, even though if you remember last year, they actually cut down some of their costs, but in this particular quarter, cash receipts up $5.8 million from the previous March from last year, but they've also started to increase their spending. Product manufacturing operating costs up $1.2 million, staff costs up $1.1 million, and administration costs up only $30,000. But the main thing here is receipts grew at a much quicker rate than their spending, and that's why the company was operating cash flow positive by almost $5 million in this quarter. And for the year to date, even more importantly, the company was or is operating cash flow positive by over $7 million. One of the things I look at when a company releases the half year or full year results, particularly if a company has quite a few divisions or segments or whatever they want to call it, they call it all different sort of things, is I want a breakdown of their revenue into the different segments or even the different geographic regions. They do have a name for this, disaggregation of revenue, something like that. Usually this is found in the notes. Sometimes the companies will include it in a presentation. So if you can't see in the presentation, just go to the notes of the financial statement and you can see a breakdown of their revenue. And so this is the half year breakdown of the revenue. And actually, in fact, they're looking at the past 3 half years. So in this particular half year, the first half of financial year 23, they had $25.2 million of revenue, and $19.8 million of that was through their services division, $3.2 million through their software, and $2.2 million through their HPCAAS. So by far, a majority of their revenue is generated in their services. So what exactly is their services division? So I'm right at their website right here. I've gone to their services part of the website. So included in the services are HPC data services, geosciences services, seismic processing, Doug wave full waveform inversion, depth and least squares imaging, petrophysics, quantitative interpretation, and regional velocity models. Most of that went completely over my head, but they do mention somewhere on the website they're all about applied physics. So this is a science-based company. So if you love applied physics, potentially this is the company for you. Maybe the one concern I do have about Doug is not his drinking or his gambling, it's his debt or their debt, because this is not him or her, it's a company. So always look at note 7, or not note, section 7 in the Appendix 5C or 4C or 5B, because this tells us the debt the company has and the particulars of the debt. And for Doug right now, I don't see any problems with their financing facilities, totaling $3.9 million right now, well, at the end of the March quarter. and unused financing facilities of 1.1. Now, having some financing facilities does give the company a little bit of flexibility, particularly if they are burning through a little bit more cash through shorter time periods. But having debt of $3.9 million is not a problem for Doug, or should not be a problem for Doug, particularly because they have more cash on their books than their debt. The main thing I look for when I'm researching companies like Doug or any other company in the world is I want to see receipts or revenue growing through time. Doesn't mean receipts have to, or revenue have to, climb every single financial period, but I want to see a general trend in receipts or revenue. Now, if you take away maybe the last 2 quarters for Doug, possibly we did have a problem. Now, I like to see at least 8 quarters of history when it comes to receipts history. So if we include only the first 5 quarters, and this doesn't go all the way back to when the company listed on the ASX. In fact, when they listed on the ASX, they weren't required to release an Appendix 4C. And then for some reason, ASX did ask them to start releasing Appendix 4Cs in the September quarter of 2021. And you can see for the first 5 quarters here, receipts just went sideways. 8.6, 8.5, 9.8, 7.8, 8.3, and then they have started to climb. So this could be a concern, a slight concern, because we only we've only had 2 quarters where receipts have taken off, and now receipts are at 15.5 million, significantly higher than ever been in the history of this receipts history. So possibly this could be a one-off, and probably want to do a little bit more research on this company just to be assured that things are running smoothly for this company, and this is just not a one-off, and then next quarter receipts go back to say $9 or $10 million. Now to the charts for Doug, and before we have a look at the most up-to-date chart, up to close to the end of trading on May the 8th, 2023, I'm just going to take you back in time and look at the chart I had in my previous video on Doug in June or July 2022, and the end of this particular chart actually is in the middle of June. So this is the first couple of years they were listed on the ASX. And this is not the sort of chart you want to see if you are a shareholder of a company, particularly if you bought in at the IPO, because the share price high for Doug, it was actually the 6th day after the day IPO'd, and that share price high was around about $1.50 to 53 cents. Really tough times during the year period between July 2021 and June 2022. Share price actually dropped from about $1.30 to a low of 38 cents. And during that period, I had my own concerns about this company simply because they were burning through a lot of cash. But looks like management have turned things around. Instead of becoming or remaining operating cash flow and free cash flow negative, they are now operating cash flow and free cash flow positive. And you can see the change in sentiment when we look at the updated chart. So let's have a look at the updated chart for Doug right now. Now to the updated chart, and this is a period from about June of last year to right now, so May 8th, 2023. I just wanted to include the end of that previous chart. So we have about 8 or 10 days of trading before we had or got to the end of that previous chart here. But the main thing to notice when we look at this particular updated chart is remember that March quarter 2022, they were operating cash flow positive. And that was sort of the first sign things were turning around for Doug, but the market wants confirmation because that could have been a one-off. And then they released the June quarter results in July, and then they would have released the October or September quarter results in October. And during that period, you can see the share price is going sideways. So during that period, even though Doug was releasing okay to good quarter results, the market was not quite convinced. They wanted more proof that things were turning around for this company. And it seems like towards the start or the end of last year, start of this year, was when the market started becoming more and more convinced that the financial performance of Doug was sustainable for the longer term. And that's why the share price of this company has moved into uptrend. In fact, it moved into an uptrend late in 2022, broke through resistance in early 2023, and has kept on rising since then. Probably the other thing to mention here is we have seen slightly higher volume over the past 4 or 5 months. Once the company has moved into an uptrend, I've just moved my head right now on my body. You can see during that consolidation period, particularly between August and December, there was really low volume, particularly compared to now. And that's a sign that the market was not quite sure during that later period of 2022. But the good thing is there were no sellers. So those who were willing to sell because this company was burning through cash had come to the opinion, well, I'm just going to wait out and see what's going to happen in the future. And there was no buyers, or very little buyers as well, because they were a little bit skeptical because they saw what happened in the previous few years once a company listed on the ASX, and they weren't buying. Hence, we had low volume, hence the share price going sideways. And as we started to see higher volume towards, or would have been in December last year, we started to see the share price rise. So potentially, we started to see more participants in the market becoming convinced, changing the sentiment in this company, and we didn't have those sellers matching those buyers. And that's why share price of this company moved into uptrend. That's why the sentiment went from neutral to slightly negative to positive in December, January, 4 or 5 months ago, and has remained positive ever since then. And the trend, definitely uptrend right now, and really the uptrend has been in play for about 4 to 5 months. That's all I have for this video, looking at Doug's March quarter results for financial year 23. A really good quarter for this company. I'd love to see this sort of momentum continuing in the next few quarters. I am a shareholder of this company. The main reason I've taken position in this company is just the trend, just because of that positive sentiment. And if the company keeps releasing results like this, or possibly even improving on their results from the March quarter, the share price should go up from here. Now, I will probably do more research on this company, particularly looking in their services division, because that's where most of the revenue is generated. And I'm just going through their services right now. Really interesting services. I have no idea what they are. For instance, Doug waveform inversion. What could that be? And they mention here it's the future of seismic data processing and imaging. You can also look at a brochure they have on their website, Revolution in Seismic Imaging. They actually have a kangaroo on their front page of this brochure. Hop inside and see for yourself. High frequency imaging with FWI, least squares imaging using field data, state of the art model building, and yeah, lots of pretty images in that. But most of this is going right over my head. And I don't have a degree in physics. I did do a few subjects in university, but I wouldn't call myself a physics expert. So if you are a physics expert, particularly in applied physics, and you've looked at this company, I love your opinion on what Doug is trying to achieve. So just put your opinion, your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.